I bid you all good morning, good evening, good night, wherever you may be watching this transmission. It is I, Mike Martins. Guys, thank you so much for joining me today for this. This is actually very important, and it was published a few days ago, and it's now starting to carry a bit of weight or a little bit more integrity in the article, and it's kind of important. It's from a business report from Global News. I don't know if they I never really read any business articles from these guys. I usually read Bloomberg and BNN, Bloomberg, and all kinds of other jazz, but even Zero Hedge has a pretty good economic outlooks on things. So let's take a look here. Business report. Canada's stock market is the second worst performer in the world next to Venezuela. What is happening, guys? Well, they're doing a good job putting down the price of gold right now. It's down, I think, like 25 bucks. It's right here. It's down 25 bucks. It's sitting at 1,651.60. It's down $25, down 1.49%. It is moving right now because right now the Australian Stock Exchange is down. Okay, so let's look at the Australian markets right now. You got the All Ords at 6,953 at down 111 points. You got the ASX 200 sitting at 6,866 down 111 points. Australian dollar is slightly upticking at 66 cents to the US dollar. Oil is starting to gain a bit of ground, but it's only up 25 cents. Sitting at 51.68. Gold is down $25, sitting at 16.51. And Bitcoin is kind of taking a small kick in the pants. And FTSE's not doing too well in the UK. And that market will be opening shortly. So what is going on, guys? Well, there's actually quite a bit going on. Now, this is very scary because a lot of investors are fleeing to safe havens. That's just it. That's it. Everyone's running to gold. So the markets, they're going to have to inject a ton of cash they're going to have to inject an enormous amount of money into the markets to get it going, like to really offset this. So what they're going to do is they're just going to dwindle the currency. They're going to wither it out, and that's exactly what's going to happen. And you're seeing this persistence. It keeps coming back. It's because the money printers or the money makers or that are printing the printing the money out of thin air to inject into a failing economy. They're persistent. They don't want this house of cards to come down, and the more that they push it, the worse it's going to be. They should have left these markets on autopilot a long time ago. So let's go to business report here. So Canada's stock market is the second worst performer in the world next to Venezuela. The Chilean stock market, the Brazilian stock market, all of them, they're better. They're doing better than Canada. According to a report by Maclean's magazine, since the market peak in 2008, just before the Great Recession, and out of 106 world stock markets, Canada is the 105th. It's the worst performer next to, now catch this, Venezuela, Caracas. The energy sub-index has fallen by more than a third, as the TSX has gained only 14% in the last 10 years, and the S&P rose only 101%. That is pretty, alongside of the American, alongside of, I think, any other country, it's actually not doing well. And with the Canadian crude oil prices trading at a huge discount, the equity markets don't appear they've gotten better anytime soon, as things aren't improving this year. In 2017, energy dropped 10% to restrain the TSX. Now, guys, remember I'm reading my electricity bill to you guys, my gas bill to you guys? It's on my channel. Type in gas bill, search under my channel. I read my gas bill. My gas bill is continuously going up. Carbon credits, carbon tax, whatever you want to call it, distribution. I'm paying on average $440 per month for gas and about $450 for electricity for just an average detached home. The reason why I'm paying so much more is because the price of energy went down. So if the price of energy goes down in the markets, like if the price of oil keeps going down, the price of gas will go up. If the price of natural gas loses value and it becomes cheaper to buy, us as consumers in our homes, so we don't freeze to death, we need to pay more for it. So that's how we don't save money. when the commodities or when energy drops in value, we actually pay more. So this is a very dangerous game they're playing. So they gotta flip their deficits. And how are they going to do it? By federalizing the gas companies, federalizing the water company, federalizing everything. So then, or provincializing or municipalizing everything. But us as the consumer are going to start looking south of the border to move, or to Europe, where enormous amount of Europeans are buying one-way tickets to Greece, Spain, Portugal, France, except France, Germany, and I think it was Germany that was on the list, Ireland, all the Dutch countries, all Netherlands, they're all moving back from Canada. In 2017, the energy dropped 10% to restrain the TSX to a meager 6% advance versus the gain of 19.4% of the S&P 500. That's some big numbers there. So far this year, energy is, again, the worst performing sector in Canada, helping to drag the TSX into a 5.3% slide. Is there a message here? Well, there's definitely a message here, guys. Global News, thanks for sharing this. And who wrote this thing? Michael Levy, CKNW here, posted on February 21st. And I don't want anyone to panic. It's a little bit of an older article. I just noticed it. It's from 2018. And markets have not gotten better because I'm still paying more for gas. So this is an older article. So I'm just going to put that in the comments or in the description below. And this is very dangerous because, yeah, this is not good. This is going all over social media, and how the markets have been performing lately. Let's look at finance.ca. Let's jump on with the Yahoo Finance. Here it is. Okay, this is in Canada. TSX down 280, sitting at S&P TSX 17,562.74, down 280 points. And then at the S&P 500, down 3,255. Remember, this is the S&P 500. The Dow Jones 27,960. Remember, that's from the stateside. And the TSX is down. The Dow was down 1,000. So it's down. It's at 27,960. We were hoping to see a 30,000 Dow Jones. Huge pop the cork, champagne, have a party. But no, Canadian is losing traction to the US dollar. Oil, again, is up 51.70. Bitcoin is taking a slight kick in the pants right now. I think it's around 9,800 US from the exchange, from what I'm seeing there. Crypto 200 down. Gold futures at 24. It was down 25, so it's starting to creep back up. It will slowly creep back up as markets open in the morning. They're very lucky on Friday. Very lucky on Friday that it was a Friday that gold started to go nuts. They were very lucky, because if that was a Wednesday, they'd probably close the markets for a holiday on Thursday. I'm not kidding you. I've heard of this happening before, where they're lucky they had the whole weekend to recoup and inject a pile of cash into the markets. Where's VIX? VIX should be up. VIX. Where the heck is VIX? Yeah, bonds are. I could have sworn I saw the VIX. It's under the Yahoo Finance. I want to go to the yahoofinance.com. The American side of things. Here it is. Here we go. There's the NASDAQ down. Crude oil, gold sitting at 16. Let's see what the silver's at 18.49, guys, US. So it's pushing the $19 mark. We might see it soon. Maybe. There's VIX. It's up. Every time VIX is up, gold is always doing well. Always. Keep a gauge. Keep a gander. I remember when VIX was at like 18.39. The Great Britain pound is starting to pick up a bit. The Japanese yen is picking up quite a bit too, sitting at 110. What else we got? Bitcoin 9.5. I was close, 9,500. The Crypto 200, the FTSE 100 is down. The Nikkei is down 783. Not doing well at all. Market's not doing well around the world. So, my apologies, guys. This is an older article. I got excited. I wanted to read it, but it's going around social media. I just picked it up today. And yeah, what does this tell you? In 2018, the markets were that bad. Here, let's go look right now. Let's go back to the TSX. go back to the TSX. Let's hit up the gold. Bitcoin, gold. All right, let's hit up the gold market. Oops, no, TSX, S&P TSX. All right. Okay, so now let's take a look at here. Let's just look at the last 5 days here. Holy crap. Look at the haircut this thing took. Let's look at the last month. Yeah, it's going back to early January. Okay, let's go back to the last year. Last 5 years. Yeah, we're going to be heading there. It is 2018? So we'll be sitting around, just in and around right here in this mark right here. So we are actually quite a ways off till we get back to that level, but it looks like it's heading that way from what I'm gauging here. Oh, there it is. December 1st is when it hit bottom right there. That's when that article was. Let me see here. February. Okay, so let's go back to February. A little bit February. Let's get back to February. There it is. Oh yeah. So we're actually not that many percentage points off to get to that level. Actually, believe it or not. Wow. So could we reach those levels? Perhaps. This is all propped up, remember, guys. So could we keep up? Could we keep up? You know, or is the CV virus going to start taking its numbers and really start making a number on the breakdown in distribution, logistics, and transportation? Are we going to see the breakdown in the next quarter of the dismantling of this entire Ponzi scheme, economic money printing, Mickey Mousing? But you know what it is? The problem is they're going to pass it on to the consumer. That's the problem. The price of energy goes down. We just pay more for everything. That's just how they're going to offset it. So we're not going to be making more. This is how we're going to get into price of things go up. Wages stay the same. We basically hit stagnation, or we turn into a zombie nation. And Japan's not doing well at all, too. Let's see if we could go back to the FTSE here. The Japanese market here. Let's go back and see if we could find it real quick here. See if we had it here, the Japanese. The Nikkei. So, let's go for the last 5 days. Oh, let's go for the last month. 6 months. Year to date. Yeah. You could see they've been really injecting a lot of money here. You could tell. You could even tell when they're injecting the money. Oh, yeah, they're all coming off a high. Everything's coming off a... Everything. Look at this. From 1965, things picked up in the 80s when they were manufacturing, Nintendo, Game Boys, all that stuff, electronics, digital watches, and then boom, they fell right off the planet. And then right here, they start taking on huge amounts of debt. And then there's where they sit right there. Wow. Anyways, guys, let me know what you guys think in the comments below. Thanks for watching.